Hello learners, we will continue with our discussion on the taxation of income of persons. Taxation of income of persons. In our previous lesson, we defined persons. We say that persons can be categorized into two. Persons can be categorized into two. That is the natural person or individuals. These are human beings. Then we have the legal persons. Legal persons are simply body corporates. These are persons who are created by law. Examples are the public limited companies, which are created or formed by way of law, like the Companies Act provides ways in which a company can be formed. So a company is a legal person, an artificial person. Then individuals are natural persons. That's what we discussed last time. And we also discussed the concept of residents. Okay, residents. And we say that resident, which is a status, is a very important concept because it determines on how taxation is carried out. Because we have persons who are residents, others who are non-residents. So the concept of resident is very important in taxation, because before you think of taxing, it's important to know the status of a person. You need to determine the status of a person, because the status of a person is relevant in relation to income tax, because it will affect the scope of charge to tax and the grant of relief, and many other factors we discussed, and say that there are various implications depending on if a person is a resident or a non-resident. Okay, so that is very important. In taxation, number one, you need to determine the status of the natural person and the legal person. The way to determine an individual status is different from the way you determine a body corporate status, and that's what we discussed in our last lesson. So today we will focus our attention on income, because remember we are talking about taxation of income. So we are today going to discuss the different sources of income, which income is subject to tax, because we are talking of taxation of income. So what is this income that is subject to tax? Because remember, when you talk about the sources of taxable income, we are talking about that income which is subject to tax. That income which is subject to tax under the Income Tax Act, under the Income Tax Act. Remember, when you're talking of taxation of persons, we are being guided by the Income Tax Act. So the Income Tax Act stipulates clearly the sources of income that is subject to tax. So we have different sources of income that can be subject to tax. Number one is the employment income. Number two, gains or profits arising from business. Number three, income from the use or occupation of property. That is the rent income and royalty income. Number four, dividend income. Number five, interest income. Number six, pension income. And number seven, any other income deemed by the Commissioner of Income Tax as being taxable. So those are some of the sources of income. The sources of income which is subject to tax. Sources of income which is subject to tax. So we will, and when we are talking about sources of income, then again you see we will have now to distinguish the source of income for individuals, and we have the source of income for companies. Okay, sources we must categorize because the income for individuals is different from income of companies. And from the list that I've just read, there is the employment income, then we have the gains or profits arising from business, then there is the income from the use or occupation of property. You can also talk of the dividend income, the interest income, pension income, and any other income deemed by the Commissioner of Income Tax. So we will generally look at these sources. The first one being the employment income. Employment income. What do we mean by employment income? What is employment income? Employment income is simply an amount paid to a person who is or was at the time of the employment or when the services were rendered a resident person in respect of any employment or services rendered by him in Kenya or outside Kenya. Okay? In Kenya or outside Kenya. So here we are discussing employment. Employment income. So employment income is, in a nutshell, the income received from employment. Okay? Income resulting or received as a result of employment. And employment is an arrangement. It is a contract between an employer and an employee. So employment is a relationship between an employee and an employer, where an employee renders services and the employer rewards the employee for the services. Okay? It's a relationship between an employer and an employee. An employer and an employee is a relationship where the employee renders services services, renders services in form of labor or work in exchange for a reward, in exchange of a reward which may be in form of salary or wages, salary or wages. So the employee is in a relationship, in fact a contract between the two. So the one promises to render services, the other one promises to reward for the services, and the taxman, out of this reward, the taxman is also paid something we are calling tax. Okay? In that arrangement, after the employer rewards the employee the salaries or wages, then the taxman shares in the reward. The taxman shares in the reward in form of tax, and that's why we are even studying what here we are calling taxation of income. So this income that the employee receives, that income is shared between the employee and the taxman. Okay? So we will be studying how that taxation is done. In a short while, we'll be looking at how the taxman charges or subjects this salary or income, subjects it to tax. So taxation of income. So employment, I've defined employment. So employment, I've said employment income is the income derived from the employment arrangement. Okay? Income. So we have seen that it is a relationship and arrangement. Okay? So an employer is taken to include one, any person having the control of payment of remuneration of another. That is an employer. Then an employer is deemed to be any agent or manager or representative in Kenya over an employee who is outside Kenya. Then number 3, any paying officer of the government or other public authority. Any paying officer of the government or other public authority. The paying officer of the government is also an employer on behalf of the government. Then number 4, any trustee or insurance company or any other body paying pension. Trustee or insurance company or any other body that pays pension. So that is for the purposes of the income tax, that will constitute employer. Okay? Employer. And employee is any holder of an appointment of office, whether public or otherwise, for which remuneration is payable. It also includes an employee who retires on pension and stays in Kenya where the registered pension fund benefits exceed 300,000 shillings per annum. Okay? So that will also constitute an employee for the purposes of taxation. Okay? For the purposes of taxation. So that's what we mean when we talk of employment arrangement. Employment arrangement. So that is very important. And We will come back to employment income. We'll come back to it later. At this point, we want to discuss briefly the second source of taxable income. The second source of taxable income I mentioned is the gains or profits arising from business. Gains or profits arising from business. Now, where a business is carried on or exercised partly within and partly outside Kenya by a resident person, the whole of the gains or profits from that business shall be deemed to have accrued in or to have been derived from Kenya. We are now studying the law. This is the law of taxation. The law of taxation. Remember, we are discussing sources of income. The second source we are considering here is gains or profits arising from business. Gains or profits arising from business. Where a business is carried on or exercised partly within and partly outside Kenya by a resident person, the whole of the gains or profits from that business shall be deemed to have accrued in or to have been derived from Kenya. Okay? Shall be deemed to have accrued. Okay? Shall be deemed to have accrued. Deemed to have accrued or deemed to have been derived. To be accrued from means to be derived from, or it may mean to arise from. That the gains or the profits are deemed to have been derived from Kenya. That is where gains have been received, okay, as a result of business activities carried out or exercised partly from within Kenya and partly from outside Kenya. Then both gains or profits are deemed to have been derived from Kenya.